Hey, what's up? Good morning, everyone. Hope everyone is doing well. It is Monday, March 24th, and we're coming off the back of OPEX. So, options expiration last week kind of unwound some of those hedges, and as we can see right now, we are gapping up significantly, and it seems like this market is finally snapping its 4 week lose streak. So, a small gain last week, small but nonetheless something to kind of snap things out. Investors remain on edge ahead of the April 2nd deadline that President Trump had dubbed Liberation Day when he pledges to slap reciprocal tariffs on all the U.S. trading partners. Despite a 5% gain on Tesla on Friday, the stock still sank for a record ninth straight week, which is massively substantial. This week overall, in terms of the calendar, we don't have like a crazy amount of news necessarily, but there is a decent bit of information. Right today, we've got some flash manufacturing PMI. You can see this from Forex Factory. And then we have President Trump that's expected to speak tentative. I don't know at what time that's expected to be, but we do have some Fed speakers realistically throughout the day. We've got Bostic that speaks today, later on in the day, and then we have Barr towards the end of the day. So we do have a decent amount of, I guess, expectations in a sense for people to come on and speak specifically around the tariffs that, again, like I said, reciprocal tariffs, we're talking about April 2nd. So we do have some time, but it's probably going to be a topic of concern throughout this week. Now, what else we got going on realistically is that, let me see here. On the week's agenda, nothing too insane. We've got some final GDP quarter over quarter, which comes out on Thursday, and then the Fed's preferred inflation gauge, which is the PCE data that comes out on Friday. So towards the end of the week, we're going to have a little more data realistically. We also saw that consumer sentiment had dropped 11% this month to notch its lowest 3 month slide since 2020. It seems that the factor and I guess the headlines of recession are still prominent in a lot of situations. Even though we are getting a bit of a bounce, a lot of people are dubbing this as potentially a dead cat bounce, which does have that potential. We'll see when prices do get at higher points in this market, and then we can start kind of readjusting our thought process and our thinking about this whole current situation. Now, in the longer term, probably going to see a revival, but right now things are still fairly fragile. Like I said, consumer sentiment had dropped significantly. Google searches for recession had hit their peak popularity in the last 12 months on March 11th, which again, right, these are a lot of signs that people are preparing for the worst or fearing the worst, when in reality those situations don't necessarily come when this is the case, right? We need peak euphoria for something like that. Now, President Trump on March 9 said that he wouldn't rule out the possibility of a recession happening this year, and whiplashing tariffs, updates, and policy changes from his administration, plus resulting slumps in the stock market, have made it fairly difficult for industries and everyday people to plan for the future. Around 70% of companies have reported their earnings recently have mentioned that tariff and policy uncertainty as one of the possible reasons for a not so hopeful outlook for this year. More than half of fund managers consider a trade war triggered global recession to be at the top for market risk, according to the survey of Bank of America this month. But, right, hard economic data like employment numbers, manufacturing output, inflation also suggest the economy is relatively healthy, with a solid job market, contradicting many consumer surveys. Now, Citigroup's chief economist, Andrew Hollenhorst, told Bloomberg, if you just look at the data, the hard data, you're looking at what happened a month ago, sometimes even 2 months ago. Surveys are telling you what people think about the future. So, there's both sides of this thing. Consumer spending accounts for 2/3 of GDP. So we could see the odds, I guess, increase for an actual recession if everyone gets too money conscious. A slew of retailers issued warnings earlier this month that a slowdown is well underway as well. So you're seeing a lot of headlines here. Now, I'm not discounting anything, but realistically, I think that if everyone's preparing for the worst, the contrarian in me thinks that, well, realistically, we're probably going to kick the can down the road just a bit longer here. So those are my general thoughts about the whole situation as we're coming into this week. And the way that I see things right now is that we are seeing a decent pop in these markets here from the Sunday gap up, and that gap up just sprang and we just let go. So it's not like a situation where this gap is getting filled on the overnight. Honestly, I was a little surprised, but after the unwind post OPEX and post VIX expiration, there is some logic to this, right? A lot of hedges, a lot of puts did expire worthless on Friday. So or some deep in the money, but they're gone. They're repositioning right now. We had a lot of market maker repositioning. So the way that I see things is that we're slowly identifying that upside momentum. Now on the S&P, I'm still technically bullish as long as we hold last week's balance high, right? The balance high from last week was about 57, 55, 60, where markets constantly failed over and over and over again. So the fact that we're above that, we've created a nice cluster of heaviness of volume over here to kind of hold prices out, as well as nice delta accumulation on the overnight. I still like that as a pullback to continue prices higher. Now, naturally, that would cause a decent little pullback in this overnight, but it's still a valid positioning. We start moving back above 5,800 or so. We start accepting into balances higher, which pushes us to the upside. The only way that I would be bearish right now, I guess today and the start this week overall, is if we actually just like negate this upside. We try to fill the gap. We start moving into balances lower, which on the S&P would suggest 57, 55, 60 area. If that area loses its ground, and we do get we get a downside reversal and an acceptance into these balances lower, what happens is that you're getting a decent trend reversal. You're getting an auction reversal, which allows for that sell side to come through. Now, I'm not saying that it's impossible to find downside after this massive rally higher, but I would lean a bit more to the upside until I'm proven wrong. So right now, currently what I see is there's a lot of volume that has amassed into the current highs of the overnight session, so it wouldn't be out of this world to find some kind of a pullback, right? Some kind of sell pressure that comes in, even if it's just temporary, to identify maybe some profit taking and some better buyers at lower prices as we go into the RTH. So last week, we finally moved into the June contract overall in the equity space. So the way that I'm looking at it is we're seeing a revitalized, I guess, buyer in this market right now. All those hedge positions have been reconfigured, so there is a bit more unwind and a little more upside expected. Now, is this going to be a lower high on the grand scheme of things? The possibility is still there with looming market risks and tail risk overall. So one of the things to consider, right, don't fall in love with any side, but currently the auctions are telling me that I should probably stick to the buy side until proven wrong. So let's do that. I'll open up the stream here at TradePro. I'll see you guys in there. And remember to check out our open Discord at community.tradeproacademy. We've got some exciting stuff coming out over the next few weeks, and I'll see you all in there. So let's open up our live stream. Thank you all. Let's have a fantastic start to the week. Take things slow. Take the information as it comes, and let's not do anything brash to start our week off. We had a fantastic Friday. Things were moving very nicely, and even though it was slow and kind of choppy, it was a pretty good OPEX. So I'll see you guys in there. Take